Um, there's a lot we have been hearing and reading about the SMEs, SME IPOs in the market, and most of the investors are flocking to SME IPOs. Especially if, in the last 1.5 2 years, there's a lot of interest amongst the investors to invest in SME stocks. We thought that the investors should be and our clients should be aware of this particular segment. Hence, we are talking about the basics and also the opportunities available in this segment. Recently, you may be knowing in the budget, the SME definition has been widened. I'm not talking about the micro enterprises. It's actually a MSME. MSME, the micro enterprises are of not much interest for us as investors, but they are a very, very important segment of our economy. What is feasible for us to look at and explore the investment is the small and medium enterprises. The recent revision, therefore, I would be talking more about the SMEs, the small and medium enterprises, and not talk about the micro at all in this topic. What has happened in this recent budget is that the finance minister has doubled the investment criteria, and sorry, 2.5 times the investment criteria, and doubled the turnover criteria. Till now, the SMEs that were tapping the market were from between up to the turnover of 250 crores. We have a SME market exchange available in India from 2012. Both BSE and NSE have an exchange platform for small and medium enterprises. In 2012, BSE started SME IPO exchange, BSE SME IPO exchange, and the NSE started NSE Emerge, which is dedicated for SME platform. Around 2014-15, this exchange started gathering momentum, and the businesses started tapping funds to raise funds through IPOs. This has been a slow starter, but last 3 to 4 years post COVID, this has gained a lot of momentum. We thought we should understand a little bit basics about these SMEs, and there are very critical points to select these SMEs. Number one being the company. The problem with the SMEs are they are not researched. We'll not be able to do a research from a publicly available data. All these SMEs may be a private limited companies, and toward the IPO they would become a public limited companies. And these SME companies are also not bound by too many regulatory disclosures, and therefore the amount of information available in the public data, public domain is very, very low. When you have investing in large, mid, or small companies, most of the companies are regulated by both SEBI as well as uh, uh, the exchanges, and there's a lot of disclosure regulations for the companies with which a lot of informations are available in the public domain. Whereas for these SMEs, there is a lesser declarations or a lesser regulations. They come out with not so frequent disclosures with the exchange, and therefore you have a not so frequent information available in the public domain. Therefore, one has to be very, very careful while investing in SMEs. But there is a point in investing in SMEs too. We'll have to see how best we can marry these opportunity and also eliminate the risk involved in investing in SMEs. So therefore, the company becomes very, very important for us. The credentials of this company, antecedents we'll have to look at. SMEs are always a promoter and promoter-driven businesses. Therefore, we should have a very strong insight into the promoters. The promoters' energy and enthusiasm is what drives the business to become big. Because our objective is to invest in the SME is largely because they grow in future, and therefore our investment also multiplies. That's the whole idea. And this being a very small companies, they'll have a limited management team, and therefore the company tends to be dependent more on the entrepreneurs who are the founders. Therefore, a lot of due diligence is required with respect to the promoter to ensure that these people are capable of building this company to a larger business. Therefore, we need to understand their business plan. A lot needs to go through in terms of understanding the business plan, the company's business proposition, the financial health. Financial health is very, very important because most of the time these SMEs are leveraged in terms of borrowing. They have been growing by borrowing a lot of money from the banks and institutions, and they may be they are tapping the capital market for the first time, and that is where they are enlarging their equity base. Therefore, the financial health is critical. We need to do a lot of due diligence understanding their financial health. Similarly, the market opportunities we'll have to see because these are a small companies with a small investment and a small market. Therefore, it's very important for us to understand the market in which they're operating and what is the opportunity available for them, and is this product or a company scalable in the market in which they are operating. So, and then obviously the risk assessment has to be made. So all these 6 7 components become extremely important, and most of the information are not available in the public domain, and therefore whenever you decide to invest in a company, it's always better to see this company or meet up with this company through meetings, or if you have anyone, your advisor or your friends or family friends, have the people visited to these companies and then take the investment call. But there is a definite advantage of investing in this because this is a segment which is contributing to 30-35% of our GDP, the country's GDP, and there are significant share in the exports of the Indian economy. And therefore, and this is also another advantage is that they are the highest employers of the Indian labor force. Therefore, there is a point in looking at this segment, but this is not meant for all the investors. Investors who can handle extreme risk can only need to be here. But those investors also have to manage a lot of information to gather this information and then only take the next step to make investments. So currently, you have about close to about 1,000 companies available. There are unique companies in the NSE emerge. They are not a common like BSE, NSE, main. Both the companies are available on both the exchanges. These are the companies which are available unique in a respective exchange. For example, if there is a company in the NSE emerge, that may not be listed, that will not be listed in the BSE SME. Therefore, you have about 1,000 companies, available in combined with these two exchanges. And these companies are also growing, and there is a point in making further studies if you are looking at investing in them. Please remember, these are not available in the denominator of one share. There are lots size available, and you'll have to buy a lot of share. One lot may be 700 share or a 500 share or 1,000 share. So whenever you buy this stock, you'll be buying it in lots and not in one number, the way you do it in the main exchange. So this is something we thought we should share with you, an illustration of if you had built your portfolio consisting of the SMEs in the last 4 years. We have done this from 2021 when more number of companies started coming to the exchange, and you investing directly into the SME stocks by way of IPO or by way of buying the company directly. So we have taken this by way of IPO. The companies which have hit the market through IPO, we have selected them. And to be very fair to our selections of stock, we would have definitely looked at all the shares with a good amount of due diligence, and still we have made an investment. Let's say we have invested, for this illustration purpose, we have taken 15 stocks every year. And if I made an investment in 15 stocks, I'm just giving equal contribution. I made one third good decision, one third an average decision, and a one third worst decision. That means my five stocks have done well, the five stocks have not done well, and the five stocks have done extremely badly. Okay, if this is the this is not an hypothesis. This is the condition around which this whole simulation has been made. This illustration has been built. So in the year 2021, if I have purchased 15 stocks and good, bad, ugly, in which case my 4-year return will be around 512%. That is an annual return of 128%. Similarly, a portfolio which is built in 2022, the entire holding period return would have been 488.86%, meaning you'll have an annualized return of 162%. And the same gets extended to 23, where our returns are 273%, or a holding period return of 546%. And in 2024, it is 236%. All the stock price we have taken as on January end. So the last 15 days, this would have changed a little bit, but then more or less these companies have delivered returns around this level. So coming back to the SMEs, this is again a very, very high risk. You have seen one of the graphs shown in the earlier topic, and I'll just take you through that graph again. This is how the SMEs work. It's a very violent behavior. It moves from the highest point to the lowest point and comes back. And when we plot it on the risk return this thing, it almost moves like not in sync with the other investments. It moves very, very high and it moves down very, very low. So therefore, one has to be extremely careful while investing in these SMEs. People who will be able to handle risk and gather information, knowledge, and hold on to the risk for a relatively longer time, maybe 5-10 years, are the ones who should look at this. Therefore, to conclude this on the SME part, it again, I would like to reiterate again and again, it's a very high risk investment. You need an experienced advisor, or you yourself have to dedicate a long time to navigate the difficult times after investing in these SMEs. Investing in SMEs through an asset manager like the PMS manager or an alternative investment manager are a better option than managing the portfolio by ourselves. Again, investing in SME stocks for listing gains is more of a speculation than an investment. Most of the investments which are happening today is through a IPO application subscription, and therefore the companies are getting 1,000 times, 2,000 times of subscription during the IPO. So most of the IPO aspirants are the ones who want to exit on a day one, and therefore it is not a good idea, because the SMEs, the whole intent of investing in SMEs for a very, very long term, not to exit on day one. And once you are stuck with a bad investment while you have made an investment into IPO, it can be very, very illiquid. It can lead to you not being able to sell at all, because there will be no quotes for sometimes for these companies available for 1 day, 1 week, for a few months. Therefore, it's very, very difficult to exit if you have made a bad selection. But then we should keep one thing in mind. Today's SMEs are the future small, mid, and large caps. If you have been able to navigate this investment, you would have made a lot of multiples in your portfolio. Does this have a space in your portfolio? Yes, if you have a proper advisor or a manager to look after this or to manage this in your portfolio. This is not for all, but whoever can manage, it's very good for them. Again, come to the disclaimer. This is not to recommend one should invest, or to say, you should invest in these SMEs or apply for this thing. This is a clear education series, and we have no interest in this segment. So this brings me to the third session, third topic, which Mrs. Vidyakini will be talking about.